Hello everyone and welcome to today's webinar. This is Wesley Sinks joining you today from the Ninjatrader ecosystem. Before I begin, I'd like to do a quick test of picture and sound. So if you could, please just type a Y in the room. Let me know you can hear my voice and see the projection on screen. All right, thank you for confirming again. Thank you all for spending time with us today. We do have a very special event in store for you. We have Rob Graham of EminiSniper ready to give you a wonderful presentation. Ninjatrader ecosystem is pleased to sponsor these weekly partner events as a value-added service for our clients. These events are intended to provide increased exposure to the various trading styles and methods taught by our partners. So if you do find value in these events, we hope you can attend them on a regular basis. Also, feel free to stick around after today's event. We do have a Ninjatrader Advanced Trade Management Level 2 event that will begin at 5:30 p.m. Eastern today. Now, real quickly, I'd like to ask everyone in the room a question. If you could, please just choose the 1, 2, 3, or 4 on this poll screen. That'll give me an idea of who we have in attendance today. And while you fill out that poll, I just wanted to remind everyone real quick of our disclaimer here. So it is important to understand there are substantial risks in trading commodity futures contracts. You should carefully consider whether such trading is suitable for you, and that will depend on your specific circumstance and financial resources. It is possible to lose all funds deposited with your broker, and you can even incur losses beyond these amounts. Please inquire brokerage support at ninjatrader.com for more information or for a copy of the CFTC full risk disclosure. Also, please remember that these ecosystem webinars are not a solicitation or recommendation, but simply educational in nature. All right, it looks like most of you had a chance to fill the poll out that I placed into the room. Looks like those lifetime license key holders take the lead here. Also, quite a few of you in the room using the free license key, as well as just a few joining today that have not yet used NinjaTrader. Now, if you are one of those in attendance who has not yet used NinjaTrader, I would like to invite you to download NinjaTrader absolutely free. You can get started with simulated trading, advanced charting, market analytics, and strategy development. This free version of NinjaTrader that can be downloaded from the following link has no expiration dates, so you can use that for as long as you like. All right, again, we're very excited for this unique event with Rob Graham. His topic for today is EminiSniper indicators, identify market direction, and key reversal areas. Please join Rob for an exciting event covering the advantages of EminiSniper. I'd like to thank you all again for your attendance today. And without further ado, it is my pleasure to welcome to the NinjaTrader webinar room Rob Graham of EminiSniper. Go ahead and take it away, Rob.
Thank you very much, Wesley. It's very nice to be here, and thanks everybody for showing up and taking time out of your busy schedules. It's very nice of NinjaTrader to put on these events. It's a struggle when you start trading and everybody's kind of finding their way and seeing what works for them. And so for these events that you can just visit and see who does what and what you can afford, mine's a very inexpensive system, so you'll see that in a few. But I think it's very powerful, and we've had a lot of traders with us for a long time, which is very nice, and some of them are here right now. Let's go ahead and get started. I'm getting used to my new PowerPoint version. Okay, there we go. All right, so that's just me and my family on a fishing trip. My daughter's sprung up. She's a little taller than my wife now. And no, we didn't catch all those fish, but we caught about 20. And after hauling them up for hours at a time, your arm's about ready to fall off. Okay, our trade room hours, we're open in the room from 8 a.m. to 11:30 a.m. Website's EminiSniper.com. You can reach me at info@EminiSniper.com, or my Skype is EminiSniper1, so feel free to get me on there. In the room, we look at EMD, the Russell, ES, NASDAQ, Euro, CL, and gold. We also look at YM. It's kind of a substitute for ES, which does not move as much, and we do like markets that move. I initially started out on ES and the Euro, which I'm sure quite a few of you do, or had at one point, and ES is a very, very bloated market that doesn't move much, and the Euro has really kind of gotten quiet as well. So sometimes we'll see a full week with very little movement on it, and then it'll make some sort of drastic move, and that kind of the thing that we look for, and we'll see more of that in a few slides here. I switched over to CL, Gold, and the Russell. Those are my favorites. I don't mind EMD, but I don't get a chance to trade it much. NASDAQ, trading at $5 a tick is not much bang for your buck, but it is a good market, and it moves pretty well on most days. I've been running EminiSniper for about 7 years now. The indicator package, so when you become a member, you get a package of indicators, and we cover them all day long in the room, and you'll get very comfortable with how they work and which ones you use in combination with one another. That's a list of them. I think that's about about all of them. We do have some bars I'm going to be introducing with Ninjatrader 8 when it's out. It includes the daily access to the room. You can get me on Skype. I can give you templates. You have access to the forum, all that kind of stuff every day. So we will cover all news events and discuss where the market is, where it's going, and give you a lot of information throughout the morning. This is just our run-of-the-mill medium time frame chart. So things of interest on it are our channel bands. That is where we like to look for these reversals. So we have reversals to the upside and downside. And when we get one of these signals, these are diver scout signals. These are very good. What we're looking for is this lower band. So on a medium time frame chart, that's going to be 30 ticks away from our reversal band typically. And so you can see all of these triggered divergent signals. You won't always get a divergent signal. Sometimes price will just come and hit that area and then retrace back to the channel. But when things are stagnant and very tight to the channel, it's not showing us much opportunity. And so what we want to look for is markets that take a journey out, test those reversal bands, and then come back to our center channel. There's a lot of information on this chart as far as bid-ask. This is going to be our smaller time frame buyers and sellers stepping into the market. Dot oscillator is a bigger time frame. So really when we have dot oscillator that's been cycled short and you see these little bid-ask turns where the buyers step in and then sellers take back over, this is going to be a signal that you're going to see later, and that's called bid-ask assist that we've introduced. Targeter, that's one of our most important indicators, and that's going to show you not only when it crosses up. The bulk of the move is always going to be when our green line gets to that midline. So that's going to be the bulk of the move up, and then when they stop, that's going to be when targeter recrosses. So it's a good signal, but again, we use it for divergence. We use it for how long a move may be, and a lot of things are built off of that. This is our higher time frame chart. So from the reversal band back to our channel, again, we're just looking for that upper band test. That's usually going to be about 80 ticks. So these are very big moves indeed, you know, not the 3, 4, 5 tick kind of stuff. When we have these moves back from the reversal band to the center channel, you're probably only going to see one. I've seen up to 3 of these in a given day, which is, you know, quite an active, dynamic market. They may stay sideways here. They will always run back to our center band unless there's something going on, like, for example, the indices will at times be very jubilant and stay overstretched for sometimes 3 days in a row. So I believe it was week before last, we started out every Monday for 3 weeks in a row overstretched to the upside. So on 1 week they didn't make it back to our center channel until Tuesday. Following week it was like Wednesday, and then the next week it was Monday. And then we really haven't seen any of these overstretched markets on the indices, meaning the Russell, EMD, YM, and ES. As far as what we're looking for, I don't like the bounces away from these areas. Once they get into the channel, we may be there for 4 hours straight, but the reversals back to our center channel is what I like and our fastest moves. Now a market like this, this is on the higher time frame. It's not showing us any reversal band test at all. So this is a market that's not doing anything. If you like the big 80 ticks moves, they're not showing up on this day at all. We'll see a lot of days where the market won't do anything. Then at 4 o'clock, they come right back to our reversal band and get a bounce. So what we want to look for in this instance is our medium time frame. So we've got this area here, and then we have these 2 tops. Now what that looks like on the medium time frame is a reversal band test early, and then a couple of reversal band tests. So these are all those 30 tick moves that we're talking about. And only this one triggered a diver scout signal, a divergent signal off of that upper reversal band. So usually you're going to see, as far as medium time frame, you may see 2 to 5 of those a day. So usually in the 3 to 4 time of day range, but there can be more than that. So again, all those moves are about 30 ticks, and those are very good. And then anything that's stuck around this center channel area, we've got other indicators if you like that kind of thing, but being more selective in your trading I think is a very good thing. You trade less, and these are market movements that you can learn very easily. Let's have a look at this move. This is clearly an uptrend. I believe this is CL. And so we've got a series of trends are higher highs and higher lows. So as we push up, you'll see bid-ask. That's what stripes this background here. You'll see bid-ask will indicate that we've got a short move coming up. And then we have the next short move coming up, and the next short move coming up, and then one over here. When you're looking for these moves, what we don't do is jump in short the second that the reversal band is tested. That is not smart. And you can get hurt on moves like, we see a lot of them where they're able to clear that upper reversal band. So that's not the kind of entry that we're after. We want to watch for that bid-ask. And targeter is nice because it will cross usually a couple candles early and give you an indication that bid-ask is about to cycle over. So on a move like this, when you get this, this short, it doesn't get all the way back to our channel. So we look at a lower time frame, a medium time frame, and a higher time frame all at the same time. And so we cover those throughout the morning for whatever markets. Usually we just do the Russell and gold and CL, but any other markets that you want to see. When we come back in a strong trend to our lowest time frame, in this case a 2-tick, you're going to see that they stall out at the upper band. They're not willing to break through that, and then they punch up and put in a higher high. So and in this case, no target cross, no bid-ask cross, but very overstretched. So we know that this is a very good area typically for a short, but it's not giving us any indication that it's time to do that. So now we have these markets cycling short here, and that is when we want to be in. And in fact, on the 2-tick, it goes ahead and gives us a diver scout signal to the short side, and we're very overstretched away from where we know that the market wants to head back in the direction of the center channel. A lot of times I'm looking, 30 ticks is a little bit too small. I like a 40, sometimes we'll even get a 50, up to 70 tick stretch away from the 2. So that's a very good area to look for retracements, and the market will always go back to the 2. There's no problem about that at all. So your lower time frame, even if things are very jubilant to the upside, they're always going to want to cycle back to our lowest time frame area. So this is giving us good indication that we do indeed have quite a distance before we come back to a support level where the buyers would want to step in again. And what happens is the buyers step in, push price up quite a bit, and then there's just no more interest in buying. So they have to come back to a level that's going to entice them to step back into the market. So in this case, did come back a little bit before finishing the big move, and so that's when targeter hooks up down here, tells us that that move is over. And we want our stop to be just above the swing high, and then we know that we have a big move here. So if you have that big a move, then even though you know this stop, it's relatively small compared to what kind of move you're expecting. So in this case, once again, the buyers step in here, push price way up here, very far beyond the moving average, but still no indication that they want to cycle short. A couple candles later, we do get this. And now we can see what kind of move is ready for us. So now that we're so far above this, there'll probably be some minor support here. This is usually going to reflect pretty close to where our lower time frame support is, and then they want to break through and get back to this center channel area. So very nice move here, and you can see how selective this is. If we were riding in the center of this channel, that's not showing us anything at all of interest. We like these journeys that price will take, and you can watch price for the whole morning, and they won't do anything of interest, and that's okay. That just means that you want to be hands off. It's if the market's indecisive, you have to let it be that way. As far as our higher time frame and medium time frame, they actually work really well together. In this case, we had a big sell-off. This is gold. I don't know. Might have been into this morning. I'm not sure. And they came down. Now, this is every time you see one of these signals on an overstretched market, there are a great number of people that were taught to sit here at swing lows and take this next glorious ride down. Now, a lot of times there's going to be no follow through because this is what that market has to do. They have to catch you having been taught what things that you shouldn't do, and that is look for a continuation short on an overstretched market. It's a very, very bad way to trade, and I know of a lot of people that trade that way, and they don't like it after a while. So what we're looking for on the first push, our return is typically going to be medium time frame channel. So that's this move here. Now we've returned there, but we haven't finished this move out to the center channel. Now, you know, obviously they were having a difficult time getting there. This is today, I remember it. So now we have this next push to the upside. We can tell where they want to go. They want to go back to the center channel. So we've already done this. Now what happens is when we get a push, if that push gets up to this reversal band on the medium time frame, if this is pushing us into this area, then we can expect this to then short back here. It may not appear like it's much of a move on your higher time frame, but again, these are those 30-tick moves. So we've got this push that goes to our medium time frame channel. We don't care about anything in the channel, but as they make the next move up, that short is very much of interest to us. So we look for those kind of combination moves a lot, and I only have these couple of charts as an example, but we look for those every day. And again, they're getting a nice second move where you might not have expected one. So as they pop up here, this was a nice move, this was also a nice move. And so that was just finishing this move out, and again, it's right in the channel on the higher time frame. But the fact that we've gotten to the reversal bands on the medium time frame, that's of interest to us. So we do want to look at those. So that's some of that reversal band stuff. This is our usual sniper signal action. I use this on a 2-tick or whatever I'm using for my smaller time frames, because on some other markets you might want to go lower for like an ES. But this is a regular signal, so what it does is it creates these arrows telling you the direction, the price, so that's that little dotted line there, tells you the entry price. And anytime you get even a 1 dot adjustment, this starts out down here at the tip of your arrow. This is where the trail dots are telling you where to put your stop. So if you get even 1 adjustment in this, this means that this has gone 5 ticks in your favor, and you can manually adjust your stop. You can also look at targeter and exit as targeter recrosses, whatever you like. These diver scout signals against you, every one of these is counter trend, right? So we've got these pushes to the upside. And this is telling you there's some sellers that are going to be stepping in here that may be eating up some of your profit. Every one of these pushes has been stalled out by these diver scout signals. So again, these are all big moves, but if you, just like the 5-tick stuff, they're very plentiful. Every one of these adjusted, you can see that they've gone, obviously into the 15 to 30 tick moves. But if you do like to scalp, I know that I was just talking to one of our members the other day, and he loves the 5-tick stuff because I guess it builds confidence and that kind of thing. I kind of like the bigger moves myself, because if I know where the market wants to go to, then I want to take advantage of that. Like a short back to our channel. There's a lot more room in that than the little 5-tick stuff, but money's money, so that's fine. So in this case, we're always looking for trend, higher highs and higher lows. So this is the break of the trend, because this is obviously taking out these swing lows, and so this is starting to fizzle out. And once it fizzles out, if you know the sniper signals, they always have to look for longs north of the moving average or shorts below it. They can't be looking for anything counter trend. Whereas diver scout and a lot of the other signals, they don't care about that kind of thing. They're just looking for reversals or divergences or that kind of thing. So this I've taken the channel off just so that we can see. This is bid ask assist, these arrows here. In this case, dot oscillator, so that's a higher time frame overall trend look at things. So As far as bid ask, that's just buyers and sellers stepping in the market. So when you have these rotations above our midline, and then the sellers take back over, that's going to generate these arrows. Now, it's not the same thing where we can say, hey, they need to get back to this channel, you know, they're at a reversal band, that kind of thing, because we don't have them on the chart. This is just to show us these kinds of moves that you can use, and actually they keep you out of any of this kind of oscillation because they're both of these panels are oscillating, so we know that it's not the same as this, it's not the same as that, where we have a strong trend, and just our smaller time frame buyers and sellers are stepping in and leaving the market. Yes, Gene, yes, those arrows are generated by the software. So that is an example of what the dot oscillator and then the bid ask and bid ask assist look like. This is the same thing. So these arrows here, this is just the rotation with the seller stepping back in. Now there's a lot of movement to the downside with these, and again, it's we can't target 30 ticks or we can't target 80 ticks like we were talking about on the medium time frame and higher time frames. But as far as very good moves, they're plentiful. Whenever you have a trend and your bid ask is cycling and re-agrees, those are very good. So this is an example where initially the trend is short and then it switches to the long side. So I like this. It's something that I've worked on automating also because it's pretty powerful. As far as what we're looking at in this next chart, this is one of those massive sell-off days where you know, just the bottom is dropping out of the market, and there is no interest in going long in a market like this. I've had one of our longtime members tell me that dot oscillator, this bottom panel, is the most important indicator that he owns, because it keeps him out of trying to look for reversals, because it tells you clearly in this case the market only wants shorts, and so additional shorts are great. And this is the kind of setup that really is very good for the sniper signal, which is always looking for with trend trades. So this is just obviously a very strong sell-off to the downside. And this is what that appeared like on our higher time frame chart. So as far as where our reversal band is, this tells us that we just have a very strong push to the short side. Dot oscillator is in no mood to cycle back north. And then we get our targeter to be very low on the chart. So this is showing us a lot of upside divergence here. Does trigger a diver scout signal with a lot of movement to it. This is in the 70 tick range, so obviously a real big move, but it's hard for a market that has sold off to this extent to then do about 130 tick retrace right back to the channel. Usually when you have that kind of selling pressure come in, the buying pressure can only do so much. So this is probably a case where they are able to get back to the medium time frame. And then that has stalled price out. Sorry, I'm behind on chat a little bit. Wooter, you're popular, and thanks very much for having a look at the chat. I usually am not paying attention to it too much. So let's have a look at our next chart. And it's just things that you want to keep in mind. And then we'll kind of look at an example of all this kind of stuff. Do not trade what isn't moving. So we've talked about consolidation. It is not your job to say, hey, the market's got to go this direction. And you will get beaten up if you decide that you can decide where it needs to go out of consolidation. I know I have. So that taught me a long time ago that I don't do consolidation breakouts, even going into news. I don't care about it. And I know some people, that's their bread and butter or something. Beware of market openings. I don't like openings. I've seen where the market needs to go to, and then you get an opening, and what that is a lot of leftover orders are dumped on the market at the same time, and they may or may not move the market in the direction that you like. So when we look at where the market needs to go to, it will do it much more so off of news than it will a market open. So every time that there's a news event, we discuss in the room where we think that the market should head. And we're often right. We're not 100% on it, but we know the levels that we expect the market to go to, and that's why we don't care if the news is positive or negative or what it is. They explain it very funny on the news. They decide that this is the narrative that they're going to use and say, well, you know, they saw a weakness, and it's not. It's where you are in your chart. And so the market needs to go to those stabilization points. So we'll have a look at that in a second also. And then as far as news being a catalyst, that's when things really pick up and go. And the European market closed. I know it's 11:30 a.m. Eastern Standard Time, so do the math wherever you are. That's a very good mover also. So if we have a very dead market that we're, say, they've stayed overextended all morning. 11:30, which brings us right into the lunchtime hour Eastern Standard Time, that's when you get those big moves if you haven't had one yet in the morning. So lunchtime trading is a little sloppy. There's a lot of people that that enter the market at that point that can make it a little herky-jerky for that hour. But if you're expecting a big move, that's often from that time frame through to like 1:30. That's a really good time frame to look for some big moves if they haven't already done it that morning. And don't zoom in on your time frame on the market. You have to zoom out and see where you are, because like we were talking about, those reversal points, those are very good and tell you all kinds of things about what's happening in the market. And when you're zoomed in too much, I've seen people do the tick-by-tick thing, and I can't wrap my mind around why that would be effective at all, because when you can see the big moves that are coming and they're playing out pretty straightforward in front of your face, they're excellent to take advantage of. Okay, so here's a very good example of all the things that we were just talking about. This is actually when I was putting together the slideshow. I guess it was yesterday was FOMC, or the day before. We were having a laugh at gold because gold was sitting here doing zero. And so we even had, I think, a fairly big Philly Fed number, whatever it was that day at 10, and it still would not react. So FOMC is at 2. So what they did here, okay, so we've got a swing low on the day and a swing high. So what they did was the news came out, they hammered the people sitting on the breakout short. So anybody sitting here, they said, I'm gonna get this huge push. They killed them. They reversed all the way up. So then you had people up here looking for the breakout long. They killed those people. Now we don't even care until we get down here, and this is still too shallow for us. So some buyers step in, and as I was watching this, I said, what I would like is for the market to come down here, hit upside divergence on an overstretched market, and then make this full retrace. So then we got our signal. Exactly what we wanted to have play out. All kinds of upside divergence on targeter. So this would mean that this candle here, we have a lower low. This tip to this tip is a higher low. So it took more pressure to do this, but there was a lot less, obviously, selling strength in it. So now where do they want to go? They want to go right back to this channel area. So that's an excellent look at what you want to see in a market after having 14 hours straight of consolidation. Sorry, I'm just trying to scan through chat and make sure I'm not getting too far ahead of anybody. All right, so yeah, these signals here, we don't care. We don't care about trying to trade out of consolidation. So basically, anybody, we'll look at charts in a minute. Anybody that is interested in coming to the room, you're more than welcome. We're going to have a free trial this Friday, Monday, Tuesday. We've had some real stagnant markets. At some points during the morning, they move nicely, and then they kind of go to sleep on us, and then they pick up again. So I'm not expecting huge things as we head into the weekend, but you know, if they're very stagnant and you want to visit another day, kind of middle of the week next week, feel free. Let me know that you attended this, and I'll give you that 20% discount. Then with your ongoing membership, of course, it includes the room every day and our indicators, and that drops down to 99 bucks a month. So with that, let's have a look at some charts and see what today looked like. This is that gold move that we were talking about. So that was the first leg. I was just putting that together in the just prior to the webinar because I wanted to discuss those reversal points when we have these moves and what kind of nice moves you can have back towards your center channel. Let's have a look at what CL was like today. This was medium time frame. They were selling off pretty strongly. We can see that this move here, this is this move. They got close to their center channel, couldn't quite make it. They did put in a little double top up here, and then the sellers took off again. It was not a very good market today as far as getting near any kind of reversal area on the higher time frame. So as far as this sell-off, we knew that it was coming. When did it come? European market closed. Lo and behold, that's when we get these big moves out of stagnant markets. As far as this move here, that's this move here. So you get your downside divergence that makes it the 30 ticks back to the center channel. This was a nice move, stalled out. I'm sure it probably got some of that smaller time frame support. And then bounce, put in a higher high, but with a lot of downside divergence. So that's what we're looking for. And the moves on the 4-tick are very plentiful and certainly worth taking advantage of. So when you're looking at a market like, say, the Russell here, it goes right up to the reversal point. This means that they got back to the medium time frame. A higher high is a sign of weakness. That allows them to finish out this move. This next move, you know, it's very straightforward. This is an 80-tick move. And the next reversal point, we just look and just say, well, this is 1158 is the area that we care about. Or to the short side, we're looking at about 1140. Let's have a look at EMD. EMD, the issue with EMD is it reverses at the same time as the Russell, whether it's at a reversal band or it's not. So that's the unfortunate thing about EMD is it really is not in control. The Russell is. And so it's a great market, trades 10 bucks a tick, has very good moves to it, but sometimes it will fall a little shy of those reversal areas. This is the case where it got right up to a reversal band. That's the nice, beautiful 80 tick move. This one's shy. You'll get these pesky diver scout signals that'll pop up shy of this area. It doesn't mean it's not a beautiful move back to the channel. It just means it's not exactly at the reversal area. This was clearly when everything cycles north. Big 80-tick move back. These are exactly the kind of things that we like to take advantage of. And even if you only take the move back, if you're watching that you've got this reversal test on our higher time frame, and you only take it back to your 4-tick, it's still a very good move. It certainly beats you know, trying to scalp 3 ticks, you know, whenever you can. Just start practicing watching for your moves back to these center channels, and I really think it's very effective. Check out EMD on the medium time frame. This is, you know, about as clear a signal in a reversal band as you can get, right back to your channel, exactly what you're after, and you know, that's really what it's all about. So, all right, Zach, if you can make one of those trades a day, I really think that that's a very good target. And you know, start in sim. I will point out when we're at the reversal bands, you'll have bid-ask cycling short on you at these areas. You'll have target or cycling short, and we know where they're going and about the extent of the move. We will keep an eye on the 2-tick and make sure that we're not getting into a support area. And I'll say, look, if you're holding this short, we are getting into a support zone, and there's only, you know, maybe 5 ticks left that we would expect before we get to the medium time frame channel. So, you know, as far as that goes, it is very straightforward, and we're looking for the same moves every day. When the markets aren't in an area of interest, we say it. This would tell us nothing on the higher time frame, so we can look at the 15th and just see if it shows us anything of interest as far as a reversal band test on that. And if it doesn't, then, you know, it doesn't. So this is upside divergence on the reversal band test. Where you have this upside divergence signal, that's where they're stalling out on, because we do have a strong trend in place that's allowing us to make lower lows without ever doing that full retrace until the following day. If there's any other markets that anybody wants to check out, usually the euro doesn't show us very much. So this is, this was a pretty good stab towards the direction of the reversal bar. Came a few ticks short, didn't give us one of those real nice diver signals. Everything just cycled north on us. And again, not a whole lot of room. If this candle had printed south of the reversal band, that would have been a much better move for us. Natural gas, we had that today. When we were watching that news come in, as far as natural gas goes, if anybody does trade it, it can be a very good mover right at news. So this was the short at news. They had just started a little bit early, so we were watching that market. We wanted it overextended as we went into the news, and then they started drifting short. So this is right when the news hit, and it almost made 50% of that move. Now, of course, it is a very good move, but you don't want to short it up here at 9 o'clock when you have news in an hour and a half. So in that case, yes, this is a reversal band right back to the center channel like we like, but with news coming in that morning, I would not want to short at that point in time. What I want to do is be overextended to the upside, have that news hit, and then have it make that move back to the channel. And then it goes right to sleep. So big, beautiful move, and then nothing's going on with that market. So it does allow you to be very selective as far as a lot of people kind of get hammered around and stuff like this, and we wouldn't dream of looking for a trade in that. So it is a different mindset. It's a lot less trading than you might be used to. And an area like this, maybe something's happening on the medium time frame for that day, but for me, I don't see anything of interest on that market. So, all right, let's have a look at some other charts. YM, if you like ES and you don't know about YM is a better mover, and so for a mover, we're talking about printing more ticks in a given day. What we want to do is have dynamic markets. You don't want to see a test of a reversal band that can't make it back to the channel until the following Tuesday. That's no good for anybody, and that's kind of the case that we see with some of these more bloated markets. The bloated markets are great as far as volume. You'll get filled, but I remember my days of trading ES, and I would be the 25th hundred person waiting in line for my fill, and that can be some brutal countdown. Especially if you're only expecting, a 3 to 5 tick move. So if you do trade ES, I do feel that YM is usually a good fit for most folks that trade that. And I wasn't really aware of this market until I had some numbers come in that were all about it. So it can be a good market. It's gonna look about the same as ES, but you're gonna have to cut down your ES the same move. So again, ES not much of a mover. Let me see, what's I stuff to use? Zach, again, I when I'm looking for those reversals, all I want to do is sit above the swing high of the previous candle, whatever, when we're looking at these diver signals. I'll show you an example in a second. We just want to be above that swing high, and then we want to look for that big move back to our center channel. So they're very good as far as a profit target goes. And you just want to give it a little bit of room. That's why those diver scout signals are so good, because they've already done that little bit of additional retracement, and then the market has taken out those breakout traders to the upside, and then they can do the real move, which is the short back to our channel. Top indicator. Let's see. What's the top the indicator that's striping? Our channel bands. I'm sorry, just let me know which one you're referring to. Okay, I'm not sure which one Adam's looking at. Discuss what's getting to an area of interest and what isn't. And we certainly want to stay away from any kind of markets that aren't moving. We like to see those big dynamic swings and those tests that we're looking for so that we can take advantage of some very big moves. This is obviously a situation where the Russell's sitting here on top of support. They've printed very few candles beneath the center channel at all. So we know that they're probably going to always be looking for the push to the long side. And then, of course, our area of interest here is 1158. So in this case, they would have a little bit further to go and then watch for things to set up to the short side. Oh, the third from the bottom. Okay, sorry. I was looking for, there's indicators in my price panel, which is what I, okay, so targeter. What this does is, I guess there's other indicators like MACD or something that will look for cycles, so you'll get kind of this green line. Targeter is going to allow us to see when the move starts, so bid-ask is just a couple candles later, and we get our big push here. Targeter shows us where the move also stops. And so I've had a lot of people that tell me that that is their #1 favorite indicator. I use it a lot for divergences, and for these big moves. I'm surprised at how many people say, yeah, I made, you know, whatever it was, 50, 60 ticks on this move just using Targeter. So I like to hear, because we have several things that we use, I like to hear some of these different approaches that people have, because it's just nice to hear that people are having such success with some of these indicators. And at the same time, I've had people that just take Targeter crosses on a 2-tick for 5 ticks, and we'll hit, you know, 17 trades in a row that way. So however you use it, however you find it effective, that's fantastic. But yeah, it'll show you where the move starts and where the move ends, which is very good. And you know, obviously, if you're using bid-ask on the cross down, you can lose quite a few ticks. Targeter is going to get you out real close to that top, and so that's very good. Dot oscillator. I don't have the dots on here, but what this does is it actually prints a dot on your price panel and shows you these midline crosses. And so for me, it's a little bit late, but that's why I kind of switched over to bid-ask. In this one, this is a great, it'll print dots right here for this big move. And then, you know, to the short side, we're almost back to support by the time that dot would print. So I've kind of gotten out of the habit of looking at it, but I have, again, people that use those dots quite a bit. Love them. On some other candle types, I know I'm just using a run-of-the-mill median Renko. On some of these other real trending bars where your dot prints, it ends up being in a very, very good place. And so I will be introducing some trending candles that I had put together, and that's going to come out when Ninja 8 is available. All right, that's my time. I got to wrap things up by 5. So I did 43 today. So that was just a couple of those bigger trades, and you know, it's when you're running a room, you could make more ticks than that, but it's not bad. So again, some of that was shorting those big overstretched charts just back to the 4-tick, and you know, those are big moves. They're really big. So please feel free to come out to the room tomorrow, and or if you can't do it till next week, or you know, just let me know. Right now, the free trial, you just go to our webpage. It's got the trial dates and all of that on it, and then you could just use this link. Password's free trial, no quotes, and come visit the room. And again, we'll talk about the exact same thing that we talked about here in the webinar, where these reversal points are, where we expect the market to go to, and all of that. So, all right, thank you. There you go, Sammy. Thank you very much, Gary. All right, appreciate it, everyone. So I hope you enjoy the rest of your evening, and Wesley, I'm ready to hand it over to you whenever you want.
All right, thank you so much, Rob. Definitely a great presentation, and you know, always a pleasure to have you in the room. And again, Ninjatrader is pleased to sponsor these weekly partner events as a value-added service for our clients. So if you do find value in these events, we hope you will attend them on a regular basis. Now, you may all stay logged in the room for the Ninjatrader Advanced Trade Management Level 2 event that will begin at 5:30 p.m. Eastern today. Again, we do appreciate the time you spend with us. Enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from all of us here at Ninjatrader Ecosystem.